Hello and welcome to livemint.com. I am Nasrin Sultana, and today we are here to discuss how the markets panned out this week and the way ahead. This week has been quite a volatile week, with the Sensex and Nifty falling 600 points and then again it regained. The main culprit is the trade war concerns, with the two large economies, US and China, fighting it out over the tariff hikes and the retaliation that China had imposed on this week itself. But the good news is RBI has reduce its inflation target for the year to 4.5% from its earlier estimate of 5%. That kind of contained markets and the trade war fears that have eased out kind of helped investors soothe their nerves. And today was a very lackluster day on the Lal Street. Markets ended very flat, but for the whole week markets ended up 2%. And for the whole year, market Sensex has been down 1%, and so has been the rupee. To discuss all of this and more on markets, we have with us Mr. Rajat Jain, who is the CIO of Principal Mutual Fund. So, Mr. Jain, what is actually bothering markets right now?
I think it's three or four things. Last year, as in calendar 17, was a great year, and we know that the markets don't really go up in a straight line. But over the medium to long term, markets do tend to go because earnings grow and all of that. But clearly, after a very strong year, markets was in sort of a mood for a correction, given that very strong performance that we had, and that sort of clubbed with three or four factors, global and local. In terms of global factors, clearly, there was a sense that the Fed would be raising rates, and probably likely they would raise rates 4 times this year, because given that the very strong US economy. We have seen prices of global commodities grow, particularly crude prices have gone up a bit. Along with that, the latest in the last couple of months in February and March has been these concerns on likely trade friction between the two largest economies in the world, the US and China. That's been the global side. And then with this sort of uncertainty, nervousness in the markets, portfolio flows do get impacted. So there was some concern in the back of the mind in the global perspective. Domestically, of course, while we have seen the earnings sort of bottom out, September 17 was the first quarter after a very long time when there were no further downgrades. Actually, there were marginal upgrades to the earnings. December sort of followed suit, and we expect earnings to grow close to like 20 odd percent in FY19. But there are concerns because the Indian macro, while it is not bad, but it's not been as good as it has been. We have seen over the last 3 or 4 years really substantial decline in inflation. We've seen the current account deficit, the fiscal deficit, all that sort of being under control. So that has begun to be a bit under pressure. We see fiscal deficit in 19 could be slightly higher. We certainly see that the current account deficit could be under pressure because exports are not growing the way they were. Plus oil prices being. So I think the macro is good, but not as good as it was. So plus it's a busy electoral season. So we have politics, we have elections this year, 3 state elections this year, and the general election likely next year. So all of this there's been a bit of caution in the markets, which I think has led to the markets being somewhat uneven this year so far.
Right. As you pointed out, there are a lot of concerns which are bothering investors right now. We'll tackle one by one. But before we go to the local factors, let us understand what are the global concerns. Like Mr. Jain pointed out, the trade concerns. Mr. Jain, how do you think of two fighting nations which are large economy, US and China, if they fight it out on tariff, how much it is going to impact India?
Two things. A trade war never ends well for anybody.
Right.
And we have seen historically trade wars, it was the early 1900s when we had the Smoot-Hawley tariffs and so on. So it's not, but as of now, situation does not look like a trade war as of now. But clearly the US, the first salvo was the $25 billion worth of potential tariffs. But the bigger thing was the investigation of IPRs, intellectual property rights, that the US feels China is unfairly kind of impinging on, a Super 301 investigation. So as of now, it does look like there will be some sort of negotiation, as it's not been rolled out yet officially. It only rolls out, even the ones that have been announced, only roll out end of May. So there's a time for negotiation across both the countries. And China has said that they will be open to negotiation. So let's see how it pans out. But if it doesn't, if there is a so-called a trade war, I mean, that's not going to end well for anybody. India directly is not so not so largely impacted, given that we are not part of the global food chain, export food chain. So if you look at this way around, the global trade has been growing very, very rapidly last year or so. But Indian exports actually are not growing the way they are because India is not so plugged in. But having said that, if there's uncertainty and there is negativity across the world, that's not going to help portfolio flows for anybody.
Right. And last year we saw kind of robust FII monies and DII monies. That is going to be constrained if there is a trade war, right?
Yeah, if there is uncertainty, clearly. There are two things about developed markets. If you look back last 5, 6 or 7 years, developed markets as a category have done much better than emerging markets. Actually, emerging markets are a lot of the emerging markets like Russia, Brazil, South Africa are big commodity producers. So given that commodities have done well in the last year, metals, crude and so on, chances that emerging markets would get more flows. In India certainly, which is 8% of the MSCI Emerging Market Index, it also get its fair share of flows. So the sense is that emerging markets should do well, but if there is a high risk of uncertainty, clearly portfolio flows, so everybody is going to take a hit. So as of now, India doesn't look too exposed from the global factors perspective, but we have to see how these flows pan out.
So moving on to the local factors that Mr. Jain pointed out. First let's talk about the elections. So we have 3 state elections. And we have the 2019 big general elections. There's a lot of political instability, questions on the certainty of the new government forming up. Do you think in a situation like this, markets tend to become very volatile, and then for an investor it becomes a difficult time?
Actually, 2 parts to your question. Will the markets be volatile? Oh, absolutely. I think markets are going to be very, very volatile. But there's a difference between an investor and a very short-term trader, effectively. So investor, somebody looks at I would not say very long term, but at least a medium term, at least 2 to 3 year time horizon. So you've got to let the earnings cycle play out, the fundamentals to reflect. So yes, it will be volatile, but for an investor, see, the valuations have corrected substantially, but not that they are in deep value territory, not at all. India is still at a premium to historical valuations, but we are not in bubble territory. We are not in the markets 24, 25, 26 times. And even in the mid-cap space, while there are certain things which are quite expensive, we're still getting decent companies which are probably available at, say, low or mid double-digit valuations. So I think for the investor who is there for 3 to 4 or 5 years, I think still a decent place for the equity markets, still a good place to be.
Right. So there's one new taxation that came in force on 1st April this week itself. That's the long-term capital gains taxation, which is at 10%. Mr. Jain, do you think that is going to impact investors, the kind of money that they're putting into equities? Because any person who is making any profit from 1st April will be taxed at 10%. There's already an STT, there's already a short-term capital gains which is at 15%. How does it play out for an investor or a trader?
Actually, India, we actually had a long-term capital gains tax till about 2004 or 5. In the last 12 years, we haven't had any capital gains. Clearly, it has helped the markets. But having said that, it's a 10% capital gains tax. I mean, is it better than? Certainly, like 0 is better than 10. Nothing would have been better than 10. But I think it's not something that's too. No, we had a big rally in the markets right from the 90s. I mean, the Sensex was actually 100. At 1987, it was formed as 100, and it's now about 30,000 or thereabouts. 33,000, right? It has gone up 330 times. With a period where you had long-term capital gains and no long-term capital gains tax. So it's not that we in the times of long-term capital gains tax also you didn't have any markets performing. People get used to it. Clearly, returns are going to take a 10% impact, but it's not something that should deter investors from coming into the market.
But do you think mutual fund industry may have some kind of constraint in terms of the flow that has been coming, SIP money, or the new investors who are putting money in mutual fund?
I wouldn't think so. I think there could be a tactical shift which could be very short-term tactical. People may want to book the gains or whatever. But other than that, I don't think the fundamental thing changes for the mutual funds. And we have not seen that. At least I think to speak for our fund house, and I'm sure it's the same thing for other fund houses too. People have seen monies come in, and the markets are choppy. Clearly, there could be some impact on account of the markets, but net still you're seeing net flow inflows into mutual funds.
Right. So shifting our focus to more, stock specific. The bank's fraud that came into picture in February, and then there were a lot of skeleton coming out of the closet without taking names. What is your outlook on the banking sector as a whole?
That's a very wide question, but 2 or 3 points. One is that Indian banks, any bank, for example, you need growth capital, because you need capital to grow. And when you have these impacts in terms of losses, then clearly your capital base shrinks and you've got to be recapitalized. In a way, it's been somewhat of I wouldn't say it's been not a bad thing, that because the economy hasn't been growing, so you really haven't needed a large amount of capital. But if there's going to be a demand for growth capital, I think banks nearly are going to be challenged, especially the PSU banks. Not the large, I think the large PSU banks are very well run. They're as well run as any other bank, the private sector space as well. But the mid-sized PSU banks clearly have challenges in terms of growth capital. That's some challenge, I think, for the economy perspective. The second, obviously, is we spoke about the fraud. I think that's more of I would not like to paint the entire sector as one way or the other. So it's just that probably it was an episode and you had some challenges around that, but I don't think it'll have long-lasting damage. I think one of the issues with investors has been that we've been talking about the sector getting cleaned up and things beginning to bottom out. So there could be some sort of impatience among investors that we've been talking about this for a very long while. It still hasn't been cleaned up. So I think that is the only side from investors they could get slightly worried about. But I think if the banks do get recapitalized, banks will clean up their books. I think over the next probably 3 to 4 years, we should see growth coming into the sector. But I think clearly it does have short-term challenges.
Right. So as you mentioned in the beginning of our conversation, that corporate earnings, which were which were kind of seeing a revival from September quarter, and then December, obviously there were offshoots, there were green shoots of, there were sectors which showed recovery. Do you think because of the banks, probably there would be large NPAs and higher provisioning this period, do you think that is going to have a negative impact on the overall corporate earnings?
Yeah, clearly. That will have an impact because banks are financial services. Of any benchmarks, the large cap benchmark, for example, there will be more than 30%, 33, 34%. It's a very large space. And clearly that would have an impact on the earnings. I think earnings are going to come out well in terms of metals because global metal prices, commodity prices are up. Energy companies should do well. IT companies should grow around 9-10% sort of earnings growth. Auto companies are doing well. But I think banks will certainly, to your question, will certainly pull the earnings down because they're such a large part of the index.
So what is your overall estimate for the corporate earnings in March quarter?
For this March quarter, I think I don't have the numbers handy, but I think probably we would see overall something like high single digits sort of earnings.
You think the pain that of GST is kind of, you've come out from that kind of transitory problems?
Yeah, I think we seem to have come out more or less. It's shown we talk to companies anecdotally, and the consumption growth is very, very strong, and the other companies who are really exposed to the GST. So I think that is sort of behind the companies. Of course, we have the e-way bill just getting launched on the 1st of April, but I think that probably should. It's been much better designed than it was the last time around. So hopefully even that should not have too much of an impact.
Many analysts that I have spoken to, they see that rural economy and rural consumption overall is going to see a pickup because of various reasons. The government's push, and obviously there's elections, so during election period there's a lot of government's boosters which kind of uplift the rural economy, and as a whole it's going to uplift the entire sector. Do you agree to that kind of an argument?
Well, we have certainly seen the rural economy doing well. I mean, that is only from consumption demand. You see, look at two-wheeler manufacturers Look at tractor demand, that's been so very strong. Talk to even agrochem producers. So overall, it's been decently good. This year, I think we should do about the cereal production, about 278 million tons of cereal production, which is a good number. Plus, I mean, a lot of which is even non-agri, the government spend that you referred to in terms of infrastructure spend. A lot of work is happening on infrastructure in rural areas. So I think that also is going to help. So overall, yes, the rural sector, when anecdotally talking to businessmen, is that the rural sector is doing reasonably well. Yes.
Right. So shifting our focus to more macro data, which is going to impact markets probably this year, would be the high crude price, as Mr. Jain pointed out in the beginning of the conversation, and also the government had increased the MSP, the minimum support price, for crops this fiscal. Along with that, probably the fiscal deficit numbers that came last week and the CAD numbers that were announced at the end of last fiscal were on the higher side. So, Mr. Jain, do you think the macro numbers, which are not very positive, are they going to be a big challenge or a risk for the markets going ahead?
Not directly per se, which is the point I made earlier. Right? Macros, while they are not as good as they were, they're not bad, but they're not as good as they were. Current account deficit clearly, because our exports are not growing the way, it's not gaining from the global growth in global trade. In terms of fiscal, clearly we certainly see challenges potentially in FY19, given how the GST growth is. Should we see, we've been seeing about 85-90,000 crores of GST collections a month. If we do get to 110,000, 115,000, it's going to be a big help. Direct taxes, I think we are doing good in terms of collections. So, but GST collections are going to be a key next year. In terms of inflation, clearly the oil prices are going to have an impact, and if the government does not hike oil prices, either the oil company or the government is going to take a hit on that. So it doesn't so much directly have an impact, but it does have an impact through other sources that investors do think that the macro is deteriorating, and ultimately government is going to need to borrow more from the market, could lead to more crowding out in the private sector. All of those things do come into play. So yes, but as of now, it's not a given that it's going to have a substantial negative impact on the markets. Markets still focused on their earnings. Markets, yes, are looking at the banking sector. I mean, they've been impatient. That's been for a very, very long time. We do hope things get revived. I mean, things get better there. But macro at the back of the mind is not something that's going to have a major impact in the near term.
All right. So overall, for the markets look good or probably volatile because of the elections. Corporate earnings, as Mr. Rajat pointed out, could give us good boosters and may take it from the revival that we saw in September and in December quarter. But there are little bit of concerns on the macro side. It's not as good as it should be, but there are little concerns. Probably government will tackle it with the crude price rising, MSP, higher MSP. There could be some risk there, but it's for the government to tackle, and probably it may not have so much of impact on the markets. But trade concerns, as we have been discussing, may have more impact on the markets going ahead. For the week ahead, we have corporate earnings starting next week with the IT companies announcing their March quarter numbers. It will be very, very interesting to see how IT companies show up their performance in March, because there were a lot of hopes that there is a kind of recovery. Most analysts are expecting an increase in their revenue and pricing. So that we will keep an eye on and probably give you an update next week. So till then, thanks a lot, Mr. Rajat. It was a pleasure talking to you, that you shared your insights. With that, it's a wrap from here. For more news and views, keep logging into livemint.com. Thank you.